Welcome to the video, U.S. Taxes and the Iraqi Dinar Investment. I am Sandy Ingram, aka C. Ingram, a registered tax professional with the IRS since 1999. I'd like to say hello and give a shout out to Pimpy's Investment Chat YouTube channel. Lee has asked me to share some important information regarding the Iraqi dinar investment and how it relates to the U.S. tax code. So you ready? Let's get started. As a U.S. taxpayer, any and all, that's capital ALL, of your income is taxable, regardless of where the income originated. If it originated in Timbuktu, it doesn't matter. It's still taxable. The IRS is not really concerned that you purchased foreign currency, but they are concerned with the date that you purchased the currency, because this will determine how you are taxed. Now, most of you have purchased your currency months and months and years prior to 2019, 2020. The date that is most important is the day that you exchange your foreign currency, or the Iraqi dinar, for US dollars. Yes, the date that you purchased the investment is important as well, but the date that you exchange it, that's when you become a person of interest to the IRS. As it stands now, based upon the tax codes in early 2020, 2019, more than likely you will report your gains on Schedule D. Now, Schedule D has two parts. Part one has to do with short-term capital gains and losses. Hopefully you will not be in this category, because short-term is taxed at a ordinary income, which is higher than a long-term capital gains rate. The part two of Schedule D has to do with capital gains held for over 1 year. Okay, this is an example, a scenario only. I do not know if the Iraqi dinar will revalue, float, or do whatever it is that it's going to do. This is an example. If the Iraqi dinar floats to 25 cents to $1 US, you would have approximately $250,000 to build wealth. The first thing that you may want to do is to hire or employ the services of a financial advisor or planner. And the reason you want to do this is because if you're not familiar with the stock market or investing money in order to generate income, monthly income for you to live off of, then you want to get the advice of a professional. Now, the other thing, and this is the reason why I even speak on this topic, the other thing that you really may want to do is pre-plan to lower your taxes. You don't start trying to lower your taxes after you exchange your dinars. You plan for lowering your taxes now. You can do this by placing yourself onto a Schedule E, which is supplemental income and loss. And that could include renting a room or renting a second home. It's just that you get so many tax benefits. And if you earn under $100,000 a year, you can get up to a $25,000 write-off with very few questions. Hundreds of thousands of people, U.S. taxpayers, are doing just that. But there's one other thing that I want to say to you here. Okay, see where it says cost or other basis? Your basis is, after you exchange your Iraqi dinar, you will receive a lump sum of cash. This is your basis. And if you're planning on staying wealthy, what you may want to do is not spend your investment or your basis, but to invest it in monthly income investments. Are you following me? What I'm saying is you don't spend your investment on your everyday livelihood. You continue your job for a moment or two. What you do is you take your basis and you invest it in ways that will generate a monthly income. And that's how you stay wealthy. Another tax form that you can use to lower your taxes, and you can get started on this today, as soon as you finish this video, is to implement a small home-based business using a Schedule C. You can do this by just starting with a $15 domain name. In fact, I have a course on Udemy that will show you how to start a home-based business with a $15 domain name. You pre-plan to lower your taxes. This is how you put yourself in the mindset to lower your taxes. The wealth will come. But first you want to prepare to lower your taxes. And you can get up to Section 179 on the Schedule C is up to $1 million US, meaning you can depreciate an expense just like an expense. It's a write-off, a deduction. That's what a 179 enables you to do, and it is now up to $1 million US. So, but you need the vehicle. See the little red car? You have to have the vehicle in order to lower your taxes, and you just don't get this overnight. This is something that you may want to plan for right now. Okay, I'll go over this real quick for you. To the left of the screen, you will see 9 states that do not have state income tax. Now, I'm not suggesting that you move to one of these states, but I just want you to know that these states do not have state income tax. Because when you have a capital gains on the exchange of your investment, you're going to have to pay federal taxes as well as state taxes if you don't live in one of these 9 states. Also, as Lee has mentioned on his channel, you may need to travel in order to get a better exchange rate. And I'm speaking to people outside of the United States at this point. Let's talk about Section 988 right quick. Let's hope not. Congress votes on new tax laws each year, so we're not sure how this is going to play out as it relates to taxes and the Iraqi dinar investor. But long-term capital gains are taxed at long-term capital gains rates, which are less than ordinary tax rates. Section 988 has to do with gains on investments held in a foreign currency, but it's ordinary or short-term tax rates. In 2019, the long-term capital gains rates was either 0%, 15%, or 20%, depending on your income. So you do want long-term capital gains rates and not short-term.